have a bullish tilt on that underlying. And basically, you structure the trade where you're selling a short call at the target, right? So the stock's at 50, you think it's going to get to 60, you would sell the 60 call at the nearest expiration, and then you would go long the 60 call at the next expiration. Now, it doesn't have to be the next week, it could be the next month. It's all dependent on your time horizon, okay? So when we talk about the front and the back, we're talking about the front being the expiration that's closest to the current date, and the back being your second expiration, okay? So what's different about this is that you have two different expirations as well as the same strike. What do we want to see happen? You want at the front expiration for the price of the underlying to get very close to that value, either at it or just below it, okay? And what happens there is you sold that short call or that short call that you put on, let's say, a week before or 2 weeks before. By the time it gets to expiration and it's at that value, well, it's not worth much. But when you put it on where there was a lot of implied volatility, you would end up collecting a larger amount for that short call. So you essentially bought a very Ivy rich with premium call that you sold, receiving that credit, and when it gets to your expiration period, you can close it for 5 cents or less, and you end up keeping that value while your long call is still on. And so another way of looking at a calendar is one of my instructors said this, and it really stuck. It's a poor man's long. It's a poor person's way of going long without paying the premium that you would end up paying for that long call because the short is actually subsidizing the cost of it. Okay. So when the underlying gets to your price, you have options, and this is where it really wants you to think about things and understand what's happening with underlying, so that you can make a decision that will be beneficial to you. So it gets to the front expiration at your strike. The underlying is not performing well, but you kind of got to the finish line, but you're not sure that it's got much gas left. Take it off. Get a profit, close the entire position, and you would just sell to close for credit. Say the underlying gets there, but you think that it's showing signs that it wants to go further. Well, you can hold a long call after you've closed the short call and just have that on as if you're just long. Now you have a naked long position. And that's exactly what we did with the Micron position. But Micron never really showed that real strong bullish stance. It might get to 60 tomorrow, but by that time, all the theta premium was out of that long call. Right? The other option that I really like, and I've done both of the last two, is you can sell another call. So the underlying got to your short strike. In fact, it even got past it, and it's showing signs that it wants to run. Well, roll it. Roll that short call to a higher strike. Now, if you roll it to the same strike out to a future expiration, you would get a credit. If you roll it higher, and if you roll it much higher, you're going to end up having to pay some for that. But you're now in a vertical where you were long, let's say your strike was a 60 and you're long the back month now 60, and you're going to sell for the same expiration now, say the 65. So now you have 60, 65 vertical, but the cost to you would be a whole lot less than if you were to just buy that outright. And you've already made money on that short call. Another another way to turn that position into something more bullish is to turn it into a butterfly. You have one of the strikes, and if you think it's going down, that could be the far right side of the wing, and then you sell um, the other wing going down if you thought the price would move against you, or up if you think it's going to run. Now, I've done both of those, and both of them turned out really well. And I've also tried to do the vertical, but the price didn't move, and I ended up closing for a small credit. Okay, so it might sound a little complicated right now. I just want you to understand that as you get more proficient at calendars, the first move is to get to your short strike, and there you have options. If you're not sure, close it, take your profit. If you feel that it can move some more, you can leave the long on as a long call, or you can put a vertical on it. Okay?
And I just wanted to, make a comment because I'm sure that there are a lot of people right now just thinking to themselves like, wait a minute, while this is in play, I can then start changing the option strategy. And the answer is yes. And I know that it's at this point, probably in your education, it's hard for you to imagine because we often just put something on and take something off. And as a beginner, you're only allowed by the platforms for the calls and the puts. But really, and though the platforms say that these are advanced strategies, they may be advanced only because they sound right now, maybe confusing to you. But these are actually the strategies that have the best opportunity for profit. And of course, I always find it interesting that they don't allow just everyone to be able to have access to this first before, restriction, but they do. And so, just while you have an open mind with the calendar, just know that at any time when you have either a call or a put and a combination thereof, you can add to or take away from that position at any point to create different strategies. And that really is, you know, advanced training, advanced, option strategies. So I know it might sound confusing right now, but if you keep practicing with us and learning, it's going to be very simple within no time at all. So thank you for that.
Thanks, Andy. Well, we'll have an opportunity with Amazon tomorrow, or throughout, well, tomorrow, this afternoon or tonight. I'd like to discuss a little bit about what we can do.
Yeah.
So,
Or is it? Could you just kind of give us an example, maybe of one of those, um, you know, like I know how to close a position, but let's just say that you're wanting to roll an option. Can you just kind of walk through that step by step?
okay. Um,
Well, you know what I was thinking because right now Chris has his presentation. How about what we'll do is I'm going to jot that down. And
Okay,
then when you're done with the presentation, Chris, on this, and we get to the actual platform, we'll show you some techniques in how to basically just add to or take away from a position to create a different position.
perfect, perfect.
awesome.
Thank you.
That's part of what we would be doing at the end,
Oh,
Jay.
great.
Okay, so I started doing calendars around earnings. So that was my foray into it. Because one of the hallmarks of a calendar, or when to use a calendar, is when you see disparities between front and other back months as far as the IV. Okay? So whenever I put on a calendar for earnings, it could be the same week of the earnings or a few days before the earnings. I treat those separately. I'm like, look, my approach was for this move, and I get it. I tend to want to take them off. But if the move becomes really pronounced, that's when I might say, okay, wasn't the original strategy, but opportunities knock in, so let's try to prolong it, right? But if I was doing a strategy for earnings way in advance of earnings, earnings on Amazon is on the 27th of July. I did some homework on Amazon over the past weekend. I wanted to get into a call calendar into Amazon, and Tuesday it moved away from me. I didn't want to chase it, so I didn't put it on. Wednesday, I said, still the opportunity. So I got in there on Wednesday morning. Or was it Thursday morning? Because today's, no, it was Wednesday. So we've only been in Amazon for a day, and we got to our target today. So Amazon, to me, looks like something that could be prolonged. But the price movement and in the market conditions that we have, I thought, let's talk about that, right? Okay. So here are some things that I want to impress upon everyone. When to apply, either you're directionally bullish when you're doing a call calendar, or you're looking at a stock that for some reason there is disparity between the front and the back expirations as far as the IV.
Oh,
Whether it be,
and that's like so interesting because when I'm sure that sounds foreign, like, what the disparity between the different IV of the front month and the back month. But we had a conversation not too long ago where we talked about Walmart pricing and Nordstrom's pricing. And when there are events, special events, that was what was once Walmart pricing then becomes Nordstrom pricing. And earnings is one of those events. So when you think about FOMC pricing and you think about certain things that are happening in the market that cause options to be so expensive, a calendar is really taking advantage. You're going to be a contractor for Nordstrom for that short call that you're selling, knowing that once the event is over, Walmart pricing's in, and you're going to ride the low volatility of that uh, difference in the pricing. And that's what he's talking about here.
volatility comes into play when there's uncertainty. Whenever you have earnings, there's uncertainty, so volatility increases. But it's not just for earnings. If there's a takeover bid, if there is talk of something out of the normal for a company, just look on the option chain and you'll start to see the volatility increase. So it's not just for earnings. And most stocks, when you look at the option chain, you can see that the volatility is consistent throughout the different expiration periods. When you see a difference, look at that stock and say, I don't really know why, but is there an opportunity for a calendar? Because remember, calendar is good for something that's just grinding. It doesn't have to move a lot. As long as it goes in the direction that you pick, if it takes a long time, I wouldn't have a higher target, but time is on my side because I have positive theta, I have positive vega, vega is volatility, right? And I have positive delta. Not many times you get those three things on your side. Most times you have delta on your side, theta is against you, and you might get vega. Okay? So trade details, you're going to buy to open it, debit. Anytime you hear debit, that's a cost to you. And to close it, you sell to close for credit. And again, whatever you paid to get in, it's all that you have at risk. Even if the stock went to zero, that's all you have to worry about is what you spent. Okay? I'm going to rush through this because disparity in the IV between the week's expiration. So this was the mu trade. This is what caught my attention. 168 was the front month, and the next month, our next expiration was 77, which is about normal for it. So when you sell anything when the IV is that high, it's like that's the Nordstrom pricing that you're getting for something that you would normally pay Walmart prices for, right? And because you're selling it, they're going to give you that souped up premium. And as long as it gets to where you want to get to at the end of expiration, you get to keep it. And you can just stop right there and move on. Okay? The elevated IV difference between the two expirations is what gives us that elevated theta. So the day before earnings, we had, this was the theta value, 37.93. The next morning, I sent this note out, it had dropped down to 0.86. Okay? This was at the close, the day before earnings, when they announced earnings at 4:30 the next morning. That theta was evaporated down to negative 0.86, right? So if the stock had gone to 60, which is what we wanted, we would have been able to close 60 for like 5 cents. Okay? And we would have been long the other 60 out to this week, and the premiums would have risen since the time we got into the stock, because we got in maybe like at 54. Okay? So that's the play.
And even though that was the play, and it didn't end up working out, the way that we wanted it to, we really didn't lose hardly any money from that trade. We had a thesis, we put it on, we reviewed it, said it's not going to work, so we took it off. And I think, what was our loss on that? Like $15 or something?
It
wasn't very. It was $25 to put it on.
And I got out for $15.
So we gave it a shot for $15. So it's nice to be able to put on some strategies that could really have a high risk, a high reward with very little risk.
Yeah, we had a potential of making roughly $210 for the $25.
There you go.
And these strategies do work, but you need the move, right? And surprisingly, at the beginning of the week, we had like a Hail Mary with the long call out to this Friday. And I think it's going to limp along and might get there tomorrow, but all of the premium has been drained out of that call. So unless it went to 70 tomorrow, we wouldn't be able to get much for it. Okay? So now let's look at Amazon. Got it on Wednesday, and I think the stock was around 113. This afternoon, this is where it got to almost. It did touch 117 and backed off. But I wanted to show why I didn't take it off. I looked at theta and it said 134. And I was looking at like $100 in profit. I have 2 contracts on, about 40% improvement. But I have 1 day to get all of this theta in the form of almost doubling the premiums for my contracts. So I said, I don't think Amazon is going to go from the peak here where it's very close to our target all the way back down. Even if it drifts down overnight, with earnings coming up in two weeks or so, I expect Amazon to keep going higher. So I put a trailing stop on one of mine. It didn't move. So I still have both. And I expect tomorrow morning for it to run right back up to 117. And that's when we should discuss what are we going to do. Okay? But here are the numbers. Um, Not a lot of volatility, but enough. It's like a 5 point difference. This week's volatility is 49.10, and next week's volatility is 44. Okay, um, and we are using the expected move. So the expected move was around 117, and it got to 117 today. So I expect it to continue. So I want to share with you my chart here. Okay, so here's my Amazon position. It shows it shows 106 in theta right now, so it's starting to come down. Okay. When I look at the analyze tab, this is where we stopped today. Now you come across here and we're at plus 100. This is where that premium really comes in, right?
Mm.
When the theta comes out, the purple line will rise and it will get close to almost 2 times, right? So that's why I left it on. Tomorrow morning, Amazon should be about where it closed tonight and start heading north. And we want to get out, I'd say by 10 o'clock in the morning, the latest. All the premium's going to be coming in. And if the price is around here at 10, if we decide we can take it off, and we'll take it off for a nice profit. Okay? It won't be all of the premium because the premium really starts dropping on that 117 short around 2 o'clock. And the reason why I know that is I've actually just sat and watched premium come out of trades just to understand at what point the textbooks say that theta comes out exponentially faster and more as it gets closer to expiration. I wanted to see that, so I've watched that happen in some of my trades. Okay, at 10 o'clock in the morning, the burn rate is not as much, but I expect the price to be there, and I wouldn't tempt fate. So I'd say, hey, if we're there and we decide we want to get out, that's the time to get out.
And you're actually
All right.
wanting to get out of the entire position. You're not just wanting to get out of the short position.
Well, that's where we can decide.
Okay.
How strongly do we feel about Amazon's chart? Remember, earnings is coming up, right?
Yep.
So we still have 2 weeks of grinding for Amazon. This is a pivot high right here, so that's the next level that it needs to get through. Now I've drawn in what I call my supply zone, and it starts where the red line is, which is about 117.23. So it's going to pierce that supply zone, and it has to get through there. It might get through there tomorrow, depending on how strong the market is, or it could get all the way through and start dropping, right? So now we have to decide how much conviction do we have in Amazon going higher? Because I know we have a profitable trade midday tomorrow. We'll be able to take it off almost for full profit. Or if we feel, well, Chris, we got 2 more weeks, the chart suggests that it could move some more. So it's been coming down, and now it's this This upturn here suggests that it's trying to go higher. It's not going higher with a lot of conviction, but it's not it's not sloppy either, right? So the next turning point for me is up here at 121. Okay, so you have this looking at price. It really turned here. Rally base drop. That's the strongest price movement on a downturn. Here you have another rally base, no, drop base drop. That's like a continuation. So when it gets up to here, it has to negotiate and get through that point here. So we have to decide, going out to, so if we decided we wanted to stay, market maker move for next week is $8. The IV is about the same, right? And so that's good because it means that we're not paying any more or less for whatever else that we put on. So we're long the 117 out to July 8th. Oh, well, we can't go any further than that. We'd have to do something within the 15th of July, sorry. So it's $6. If we went there, 6 plus 116. What was that? I said 123 is where it would change. It would need to.
Yeah, 122, 123.
120, 121, 122. All right, so that's 122, and that's about where that supply zone is. So we would be trying to go out to the 122, and I would say, look at where the audience is. See the audience hanging around this even number?
Mm-hmm.
The market loves even numbers. There's a thing about even numbers, right? So instead of going to the 122, which is what the market maker is suggesting, I would say we would try and sell the 120, right? So how do we do that? So tomorrow we would come in here and we would click on the short, right click, create rolling order. It will automatically just roll it to the same value for the next expiration, right? So you see, let me take stock. We are long 15 July 117. We're getting out of the 8 July 117 sometime tomorrow if we decide to roll. And to do that, you right click on the 117 short call, create rolling order. It automatically selects the next expiration, the next 117 in the 15 July expiration period. And then you go in here and you say, I want to change that. This is the one that we're buying back. Okay. And this is the one that we're trying to put on. So we would change that to 120. And look, right now it's saying we could get a credit for it. And then tomorrow, this is the part where I sometimes struggle with the overnights. That 117 is going to get closer to zero. So we might end up having to pay a little bit. But if we did it today, or do it first thing in the morning before all the theta comes out, we'll get a credit for it. So that would mean our trade started at we paid where is it? It's on. We paid
Is it 140?
130.
Okay.
We paid 130. I paid 130 to get in. And now we would be getting let's say 60 cents back. Okay. Um, and now we have a vertical 117 to 120. But what this isn't calculating is the fact that the 117 that we're long, it's at 255. To sell it right now, you get 247 for it, right?
Mm-hmm.
So you have a long position that is costing you, or a vertical that's costing you somewhere in the neighborhood of $70. And the upside on a 117, 120, if I just did that outright, let me see if I can do that. 117. Doing it my old way, Sandy, sorry. I'm long to 117, right? That would cost me about 21. And if I analyze that, my max on that would be somewhere like 2 something. So that's 537 that I could make if it went there, right?
Yep.
So by choosing to roll it, this is where the real money comes in, because you've already taken care of the Nordstrom prices that you got at Walmart prices. And then you turn it into a vertical that you got very inexpensively. And if the price gets there, that 117 you've had on for some time, so it's gaining a lot of premium. There's a lot of good reasons why you should do that. Now it's all about what you're comfortable with. Do you rather take the money and say, all right, I understand, Chris, but money's in my pocket right now. Sandy said, get in and get out with some green. So I did that. Or you might say, maybe I do one. I have 2 contracts. I close one and I roll the other. So there are those considerations that a calendar really provides for you. But it helps when you understand the underlying and you have confidence, or you have some reliability in what to expect, right?
Yeah.
Amazon is not something that I trade all the time. I trade it around earnings, mainly because it used to move like a monster. It used to move like Tesla, and I didn't like trading stocks like that. I think since it's split, it's calmed down some. So,
And being the tail side of the coin here, we are in a bear market. We've had 4 strong days, and we have to think of the likelihood of this market either continuing and breaking through our existing resistance, or are we going to have a pause and or a reversal here? So things that we've all experienced within the last 4 weeks, easy. I'm sorry, did Debbie Downer just enter the room?
No, that was a smart Debbie. Because I was thinking the same way. The 2 weeks in a row kind of bull rally or reverse rally or whatever you call it could fake some people out, and I don't want to be one of them, right? The only thing I think that is bullish to keep the trade running is the fact that we have 2 weeks into earnings. And most companies, if they are um, somewhat predictable, they tend to run up into earnings. Or if they have the potential to produce good numbers or to produce a lot of volatility, people will buy them up into earnings. So that's the only thing that's going for, let's think about doing this. Otherwise, um, with the market conditions being what they are, I'm less inclined to say let's keep going. But can we open it up to our community to see what others might have to say? How many of you think we should roll it?
Hey guys, give us a one in the chat box if you think we should roll it tomorrow, or two if you think we ought to get out of it.
Get out of it with profit.
Yeah. Okay. Right now it's a tie. Well, actually, it seems most maybe 2/3 want to get out with profit. Maybe half and half want to go ahead and roll it. So,
Sandy, could we do both? When we text the alert, give the instruction on how to do it? Or,
Absolutely. Absolutely.
Okay. I mean, it's as simple as what I showed you. Timing is going to be a little bit of an issue, but I think by, say, 10 o'clock, you should be able to.
Yeah,
You want
we'll
to try and
say,
do it when it's close to the strike, right?
yeah, we'll say sell or roll, and you can put the directions in the Ask Sandy Chris area, and or the Ask Chris Sandy area, and people can follow us along there. But if you want to take your profit, then you're going to exit hopefully with profit.
The only way we don't exit with profit tomorrow, Sandy, is if there's a major reversal down to 115 or 114.
Oh yeah, we can't. There are no guarantees in life, and we've been for all of you that's been frustrated with all the choppiness. It's been a pleasure to have an afternoon and a half of uh, trending, a trending market to enjoy. So we'll see what tomorrow brings, and then we'll trade it accordingly and give you the opportunity to make that decision if you believe it's going to go higher. We've just taught you basically how to be able to roll that position and into basically a vertical debit spread so that you can do that. And I have to tell you that you don't have too many discords providing this type of education, and typically this type of education is rolled up into a webinar that costs several $100s. These types of strategies, this and butterflies and vertical spreads, are very you know these types of spreads provide a lot of opportunity for success. And so if you're unable to trade them for whatever reason right now with your platform, please paper trade them and just learn them with us as a group. You'll be happy that you did one day soon.
okay. Wyatt says that a bird in hand is worth two in the bush. So sometimes it's better to take the money and run.
I like Wyatt. Where's Wyatt? I like Wyatt.
Questions outside
Yeah,
of?
well, there was one from Shills, and what we talked about is maybe we can do another one on this. He says, what about the possibility of doing a calendar with SPX, and then maybe some alternating calendars? Let me go back and reread his comment.
He's actually talking about doubles and triple calendars.
Yeah, that double and triple calendars. So, in what conditions would you do that?
So a call condor is what I would. Well, it's not a calendar, but I've been trying call condors on SPX because it's like a bullish iron condor, and you're not selling it to get a credit. You're paying for it, but it creates the wings or the goalposts that you want the price to land within. And twice this week, got within the wing or the goalpost, and at the last second, it moved up or down. Um, I haven't done a double calendar. No. But they're yeah, I have done double calendars, but around earnings. And so basically, you have a put side and a call side, and you don't know which way it's going to go. If it goes up, you're covered on the call side. If it goes down, you're covered on the put side. It can be a more expensive trade because you're covering both extremes, and typically it's done around earnings because you don't know which way the stock's going to go. I don't like to do them because it costs a lot of money, and it's like playing roulette and covering both colors. To me, just doesn't seem like a good allocation of resources. Pick one and go with it and be okay if you're wrong. But I'm not going to cover every number on the board just to say that I got a winner, right? So if the IV is high enough and you can make a lot of money, you can, but it's going to be a costly trade.
All right. Well, thank you all for joining us tonight.
I just want to say that uh, Chris, just what an excellent presentation. Believe me, I've sat through several of these types of, uh, education, and I just find the simplicity of the way that you describe calendars and butterflies just to be excellent. And I'm just so happy that you're here with us to provide us with this information. So I thank you for being here.
Absolutely.
Thank you, Sandy. You're
And,
my
and for those of you that are on the call, or for anyone who's listening to this in the future from a recording, there is a channel that you can ask Chris and Sandy, and don't get into minutia. He's not going to log in and show you how to do all this on your computer, but you can ask questions, and he will be glad to respond to that. And Turbo Cash says, is there a replay? This is being recorded and it will be posted. And Sandy, what channel is it going to be in?
We actually, in our subscription area, have a uh, live training, live stream recording channel, and that's where we keep these.
Right. Okay. And since we only have subscribers tonight, that means that you guys have this opportunity to play it back and go slow. And then if there's anything that you don't understand as you listen to it again, and feel free to reach out to Chris or Sandy.
Yeah, and by the way, with that, oftentimes, people have questions, and all you need to do is just DM, and we'll set up a little time to 10 minutes or so to get together on Discord and share screens and kind of walk you through whatever roadblock that you're having, whether it be learning a strategy or something in regards to your charts or indicators. So please know that you're not in here as someone that's just kind of in a group but not having access to the people that actually put all of this together. So at any time you have a roadblock, you want to discuss something, uh, please reach out to us. Phone number, DM, email, we have it all. Just reach out and we'll get in touch and we'll get you through that.
Or if you decide that 15 minutes is not enough, you can schedule a training session with Sandy. As a subscriber, you get a 20% discount off the rate, and she can log in and and you can actually watch her do the screen and set your screen up so that you can automate trades. You can you can trade almost like Sandy. So if you need help setting up toss or getting some one-on-one, there's a place in the Discord where you can block that in as well. Anything else, Sandy or Chris, before we tell everybody good night?
Jay, you're so awesome. I just want to say thank you so much for your help. You're just so wonderful at this. And really do appreciate you being here. You're a huge part of our Discord.
Well, thank you. To me, this is a lot of fun, and I am learning to trade. Today, I had 4 trades that were all green.
That is awesome.
I am pumped. I told my wife, I said, I don't care how much I made. I just had 4 that were green.
Well, I was kind of worried that I was getting that I'm enjoying the text service, and I think I might be having too much fun texting a little too much. So I hope that's not bothering anybody, but hopefully it's coming in loud and clear, and you're able to get the information that you need to make a decision. Or if it's not good timing, you can pass on it because.
Oh, and thanks, Lobo. Chris, Lobo said this is the best explanation of calendar spreads that he's seen. So,
no doubt, 100% true.
Yeah. Okay. Thank you all very much. Oh, Maruga says one more point. Learn how to close a butterfly, a broken wing butterfly, before you get into an options play. He learned that the hard way with E-Trade, trying to close and didn't know how to do it with their website.
Oh, no, really? I remember Jay one time getting a hold of me. Do you remember that? Do you remember that, Jay?
Oh, boss, what I do here?
Hey, that's okay. There's somebody here that's going to help you get through it. That's the whole point. We've all been there. Done that.
Some of us are very impulsive and just jump into something and do it. And then you figure out, oh crap, I don't know what I've done to get out of this. So
exactly.
That's be sure and ask somebody before Friday at 2:00.
There you go. All right, guys. Good luck tomorrow. We'll definitely keep you abreast of all the happening trades that we're doing, and let's stay green.
All right. Good night, everyone.
Good night.
Good night. Bye, Sandy.
Bye, Chris. Thank you so much.
Okay.